Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Saturday, the 13th of January, 2007. We're going to take a look at some stocks for trading this coming week. First, I've got ADC Telecommunications on the screen. It's symbol ADCT. And you can see here that the stock is starting to finally shape up here a little bit after doing a whole lot of nothing for the better part of the last year or so. Let me get my trend tool. We can see that we do now have a rising 10, 20, and 50-day moving average with the 10 above the 20 and above the 50. What we do also see here is a declining 200-day moving average, and that right now is located about $16.40. So we're going to make that our upward target here. As far as the longer-term time frame, you can see here that the stock has had trouble up, near that area a little bit, maybe a little bit less than that. But I think the 200-day moving average does make for a good target. Here's what I'd like to see happen in order to purchase this stock. I'd like to see it pull back just a little bit, let's say 1505, and then to buy the stock above 1510 as it regains a little bit of momentum. We could put our stop down below this 5-day moving average, about $14.86. And again, our target would be $16.40. That would give us, in this case, about 24 cents of potential risk for the opportunity, hopefully to make about $1.30 on the upside. ARRS is the symbol for Arris Group, and Arris Group here, if you look at the daily time frame, had some news on Thursday rather. I did check the news, and they said the earnings are going to be better than expected. And when I saw the longer term chart, that's the monthly time frame in here, it looks like it's really made just a really nice longer term base, that if this stock gets going, it could really get moving here. And one of the things that could be a catalyst for that, besides the earnings, is the large short position. There's about 10.5 million shares that, as of December 15th, that have been sold short and not yet covered. Now, most of those shares, or actually since April of last year, as of April 15th, there were 5.5 million shares. So in between April 15th and December 15th, the shorts added 5 million shares. Now, if this stock could get going, they're going to be in a pretty bad position, and that could be good for us, obviously. We'll be a little conservative here, though. What I'd like to do is buy the stock above $13.20. We'll be conservative, that is, in our upward target. I think buying the stock above $13.20 makes sense, and we could put our stop at about $12.97, so 23 cents of risk. And I think that these highs up here near $14.30 make a good initial target. However, I do still think that with them reporting that their earnings are going to be better than expected and a big revenue increase, along with that short position, this could be a stock that investors might want to take a closer look at the fundamentals and see if it warrants a purchase for a longer term hold. FFHL is the symbol for Fuwei Films, and this Chinese-based or China-based company, I think it is at least, was up on big volume after its IPO. It's settled in on light volume, and now it looks like the stock might be heading higher again. The stock did get extended, though, late in the day on Friday, so what I'd like to see happen would be a pullback down to $13.85. So a pullback just above that above that 5-day moving average, which is about to flatten. It's flattening out right now. And then to buy the stock above 14. So we want to see it pull back to at least $13.85 and then buy it on strength above $14 a share. A stop could again go at $13.68. That would give us a risk in this case of 32 cents. And just a conservative upward target, I think that we could look for about $15.25, which is this high here. Although this is the type of stock that can get going very rapidly, so if it hits that target quickly, I would suggest selling half and then continue to raise your target, your stop, because it could potentially get moving much higher than that. Microvision, symbol MVIS. I'm going to provide a link on the blog to another blog, The Fly on Wall Street, who has a big position in this. He understands the fundamentals real well, and you ought to check his site to see what he thinks about those fundamentals and the product they have. But the stock has had a great run, obviously, here in the last 4 or 5 months. But it looks to me like it can continue higher, perhaps up to, I think, about $4.50 a share. So I think that looking for $4.50 a share would be our upward target for this stock. And here's how I'd like to see that pan out. I think you can buy the stock above $3.80. It had this nice run. It's consolidated. These moving averages all move back and forth, starting to make a little bit of higher lows. So if it can make a higher high here, I think you want to purchase this stock above $3.80. Put your stop under here, 368. So that's just 12 cents of risk, and I think it can make it up to $4.50 a share. That would give us 70 cents of potential upside. Now for a one short sale candidate would be Rackable Systems, symbol RACK. You can see this stock is looks like it's breaking down in here. Now on the short-term time frame, just a simple short on weakness below $31.35. You put your stop up above $31.80. So that'd be 45 cents of risk, and I think the stock can drop down towards about $30 a share. So we'll be risking 45 cents in this case to make about $1.35.